what's going on?
Hi. Doing pretty good. How about yourself?
Pretty good, pretty good. Had a long night. Got up really late. You have the... I think I'm going to mute the music here. If it's not already.
I was hoping the music would keep on going because I'm going to probably produce a lot of dead air. At least in the beginning until I get going. Like I said, I'm a little brain dead. I just got finished doing a podcast that lasted about an hour.
Nice, nice. Oh yeah, it's up to you whether if
the music's cool.
Much, let us... All right, cool.
So you're a little fried too. You get up late. What's late?
Yeah. Well, I stayed around till about 6 or 7 in the morning.
Oh, wow.
And then went to the grocery store and then came home and immediately crashed. So, yeah. I got up pretty late my time.
So I have TeamViewer open here, and I don't want to mess up anybody's stuff.
Yeah, you can go to the top where it says unnamed and just either load a layout or select a new one. Yeah.
New chart layout.
New tab.
All right, let's try creating a new one. See what happens. We're gonna take some chances here.
We can also save. You can also up there save the layout, and then you can name it for yourself. So you can always
it's like a full version, pro version, and you can save as many as you want. Or
yeah, we've got the premium, so we've got a lot of space here. So yeah, feel free to make your own layout, and feel free to use it whenever you like.
All right, so we're on the BitMEX. Okay, so we got the highest volume. That's cool. I got to arrange everything here. I've got a couple of screens. Can you pop out the chat on Twitch?
Oh, like if like trying to view it on the stream computer?
Yeah. Well, no, I was thinking that because
on your side, yeah, you can. If you hit the cogwheel right under the entry for the text,
yeah,
it'll bring up the menu, and there should be a pop out and a legacy pop out.
Oh yeah, there it is. So now I can put it anywhere and see. Right? That's cool. All right. I've got too many things open here. I'm gonna do a little house cleaning.
Yeah, no problem. Take your time. Yeah, just do what you got to do to feel comfortable, and make yourself at home. I'm working in Premiere Pro right now, so I've got a bunch of things going on my side too.
Right.
So I'll try to monitor the chat with my phone.
Fortunately, I don't do any of the production work on the podcast. All I have to do is show up and start speaking.
Yeah, because then it's like the podcast, and then you're looking through the podcast again at a much slower pace.
Yeah, yeah. However, once it's done, I'll publish it on my YouTube. I have some pretty good news on. If everybody heard about my YouTube, it got deleted from someone who hijacked my identity, and I put something on Twitter, and I hashtagged Google, and I think because I have a verified account, they kind of paid attention to it, and so they found me, and YouTube reached out, the YouTube team, and said they'd like to help. And so I followed them, and then they sent me some DM, and then I gave them all the information, and I'm not saying it's going to actually happen, but it sounds like they're going to help me out and get my channel back.
That'd be really cool. I'm sure they've got a lot of data and like all of your videos somewhere. Somewhere out there.
Well, the only thing I'm really worried about is, if it goes on too long, that some kind of purging algorithm that Google has comes by and just gets rid of everything. But I would imagine that they would hold things for at least 30 days, I would hope. And it's been less than a week.
Yeah, I'm pretty hopeful for your situation too. Hopefully they can work it out.
Yeah. All right, so that's pretty cool.
It'd be one of the greatest turnarounds of the year, I think.
Oh man, you know, I started thinking about all the videos that I've created over the past 8 or 9, 10 years, and one of the very first videos that I uploaded to YouTube was a video that I did for Apple, and they featured me in their, you know, Apple on their site. They used to have a section where they would feature people, and they did a big feature article on me, and I was part of the, I don't know if you remember this, the Think Different campaign.
Yeah.
Yeah, and so I have the video from that original feature article and everything, and it's on YouTube, and that's the only copy that I have.
Oh.
You know, I mean, and there's a lot of things like that. I can't tell you how many different videos that I've participated in these very special things, and that's the only place they exist.
It's like a magazine cover or like a magazine article, you know, in that digital format.
Yep, absolutely. And it's almost like a time capsule for my life over the past 10 years. I've had you know, to the chagrin of my wife, I've had a habit of taking things that were significant in my life and then throwing them up on YouTube. She tells me I shouldn't do that. Oh, look at that. Someone has my... yeah, so someone put up my my current YouTube channel, which I'm trying to build up. And, you know, I've been able to attract 420 people in the past few days. But the problem is that nobody can find me. You know, once they take you off of YouTube, you are gone. It used to be that you could do any number of different search terms, and my name would, and my channel would come right to the very top of the YouTube search. And but now it's hard to find, you know, where I am, and man, I feel so I don't know, so alone.
Yeah, a large part of your exposure is just removed completely.
Yeah, and not only that, but all the linkages and all the different comments that I've made across literally hundreds of other channels, and the links that go out to different sites and link backs, all of that creates this incredible web of connections that boosts your, I guess, your social awareness, you know, up on the Google search. And so that's all been kind of taken away. And that was principally how I, you know, basically what I built my business on. You know, if I'm trying to attract people, attract customers, I was easy to find. Significantly more difficult now. You don't appreciate it until it's gone.
That is a pretty common expression, you know. It really doesn't apply until it affects you directly in such a drastic way, I feel.
Well, I've heard of a lot of people going through something very similar where their identity is stolen, and through this exact method where somebody goes to an AT&T store and then pretends that they are you. They perform some kind of scam or hustle. Where
it's like social engineering, just trying to find out as much about that person. That,
well,
you know,
it's not only that, but it's also convincing the AT&T store person there, you know, to maybe bend the rules a little bit. You know, you give them this sob story or whatever, or they say that there's even sometimes they'll call up a third party on a phone and pretend that it's AT&T, right? And then they'll go back and forth, and they'll get the salesperson on the line and say, you know, maybe this time you can just let it go, and dupe the salesperson.
True.
However, they did it, and it didn't take them long. It was really a directed attack, so it wasn't not like you would think that, you know, maybe somebody got a whole bunch of phone numbers, they'd go out and try to infiltrate them, and then they'll look for things that they can go after, like your, you know, any bank accounts or your PayPal, you know, things that are really obvious.
Yeah, no finances, right? No financial attack of any kind.
Sure. but how many people would like go after someone's YouTube, right? So that tells me that this was a directed attack. Someone was going after me, and they were going after me for what I can only assume was my very contrarian and outspoken attitude in the crypto world. And they take a contrarian view as a negative view, when that couldn't be further from the truth. I mean, I'm a technologist. I love technology, and I really understand where crypto technology can bring us. I'm just trying to be a realist out there, and apparently that butthurt a lot of people.
Yeah, you definitely push someone's button. So besides that, have you been, I guess, actively trading or looking for any specific levels on the daily, or is there anything, any kind of interesting levels we might be coming up on a potential downturn? Or are you looking more on the long term, a little more zoomed out?
Yeah, so this is let's see, we're on this is the 1 hour chart. So I'll tell you what I normally do when I'm trying to assess any kind of asset that I'm interested in. I'm going to work on Bitcoin here. I look at 3 different time frames. I'll start off with the daily and maybe go to 4 hour and then 1 hour. And the reason why I do that is that, the very first thing that I do, that it's aside from the chart, and I know that everybody's looking for, chart dynamics and chart analysis. But for me, the chart is nothing more, and all the technical tools that I use are nothing more than a way to model my hypothesis of the market. And so I spend a great deal of time just thinking about the fundamentals of Bitcoin, and I've developed this narrative over time that, it's taking in a lot of different factors, and then from that I've developed an overall bias in that longer term. And what I did when we were talking yesterday, I tried to explain my overall philosophy and how I go about trading is that my main principal strategy is to trade in multiple time frames and trade multiple non-correlated strategies. I don't trade one thing. I don't trade one asset, one strategy, one time frame. That's exactly what the brokers want you to do, and that's exactly what will get most people into trouble, because it really it limits you, and it forces you to be right way too often. And that's the problem with trading, that most of us find that we can't be right all the time. As a matter of fact, most of the time we'll be wrong. What we want to do is be wrong. When we're wrong, we want to lose small, and when we're right, we want to be really right. So in order to make that work in the large, there's just no way to just concentrate on one thing, one time frame, one strategy. You need to mix it up. And here's the crux of it. When I say that I'm looking at multiple time frames, there's a very good reason for that, and that's because the longer time frame that you trade in and the strategies that address longer time frames typically have a higher degree of probability of making you money. That's just a fact. And that's the reason why all the biggest traders in the world, the most successful traders, are trend traders. And I don't care what anybody says, there is not a single day trader out there that can compete with a trend trader. Matter of fact, most day traders are just big, fat losers. Day trading shouldn't comprise any more than 20% of your total trading. If you're doing more than that, you're taking way, way, way too much risk.
Yeah.
So that's not to say that day trading can't be good, but what it's saying is that you should choose your opportunities very, very carefully when you're doing day trading. And you have to be damn well sure that the strategy that you choose has an edge and that you can exploit that edge. And so relegate that day trading to those types of trades. Now, that takes a lot of work and a lot of research, and a constant churning of a wide variety of strategies that I call curating. And so what you want to do is you want to be trying out all these different strategies, but you're putting them in kind of this limbo mode, this curation. And those are the strategies. That's like your basket of tricks, right? That you're going to then pull out and then apply to your current campaign when the opportune time is correct, or when the opportunity is there. So, yeah, go ahead.
I see a lot of, I didn't mean to interrupt, but there's like this scalping strategies trading off of like 20 and 50 EMAs and stuff like that.
Yeah.
You're saying like the stuff like that, the stuff like that that's in day trading, it's a very, a higher risk way to do it, or is that more of like a lazy
approach? Absolutely. Especially if you're using any kind of price action or EMA or any kind of moving average to do scalping, you are at a severe disadvantage. All the pros that I know of that do scalping don't even use a price chart, don't even use indicators. The only thing that they use is time and sales or a trading dome. That's it. Now they have some more sophisticated tools that allow them to parse the information that's coming through on their order book and their trading dome and and in most trading domes, they also have like a volume profile on them, but you can see the orders coming in. And on a time and sales, you can see the orders coming in. And if you can parse them in such a way that you can see the flow of orders coming in, you can determine when there's either a bullish or a bearish flood of orders coming in that you can ride for a few ticks, depending on what you're trading. I guess in crypto, right, a few ticks isn't very
ticks here.
Yeah, many ticks. You can like in Bitcoin terms, it's not unusual to be able to grab $50 to $100 scalping, but you have to be able to identify when those areas are coming up, but you use order flow. And once you get good at it, you can have a success rate of about 80% or better. And, but spending your time doing that, you're going to get maybe, I don't know, maybe 5 to 10 good opportunities a day. And that might not be enough for you to fill out your whole strategy. And some days it won't work. So you need other strategies that can kind of fill the gap. And so you'll have swing-based strategies and then trend trading based strategies as well to fill it out. And those should be your more predominant strategy. But scalping with an EMA, I can't imagine that is an effective way to. And I'm sure that people will say that it's effective, but you don't know what's effective until you've actually done what the professionals do. And I don't know a single professional that uses an EMA to scalp. All the prop trading firms, they'll send you through extensive training and programming, and you'll never look at a chart. They'll show you how to read order flow. Period.
And the time I've spent on BitMEX scalping, I'm generally looking at the orders coming in. If I'm looking at any specific levels that get close to what I'm looking for on the daily, I'll spend time mostly just looking at the walls that are constantly being built and torn down. And most of the time it's in small increments of 10 or so. Right. And over a time frame of maybe 30, 40 minutes or an hour, you'll see one specific level being tested, either supported or rejected multiple times, and it usually gets pushed further away until a breakdown, and that's usually what how I do my scalping.
The problem with looking at the order book and the limit orders that you're looking at is that they're mostly designed to deceive other traders. That's what's happening. They're putting up these order walls, buy walls, sell walls.
A lot of fake walls. Spoofed.
They're all fake orders. They're there to attract people and to show strength or weakness. They're there specifically to deceive you. So while it's interesting to look at that and kind of devise an analysis methodology or to figure out what their game is, but what you really should be looking at is the time and sales, the actual orders, the actual buying and selling off the bid and the ask.
Mm-hmm.
But that requires, you know, sometimes some special tools so that you can get a feel for what is actually coming in and going out. Are we predominantly in a bearish flow or a bullish flow? And those tools aren't available on every platform. However, there is one platform that's available now, Tensor Charts, that does provide that kind of capability, and it is a fantastic tool. So I can see, you know, when orders start piling up and start coming in, and when there's a threshold met, that I can tell that price is going to start moving. And once that threshold's met, I just sit there and just jump on the wave and let it ride for, you know, $25, $50, or $100.
It seems pretty solid. I know we've got Vivaid that shows us a lot of his work on the tensor charts as well.
Yep. Yep. That's the way to go. But like I said, you know, doing that all day, man, that can get tedious.
Yeah.
You know, I mean, if you enjoy doing that, some people enjoy it. I can't imagine it. You know, I have a life. I'd like to every once in a while put on a position and then go out and walk through the woods, or take my dogs for a walk, or go to the beach or something. And you can do that these days because you have your phone or your tablet with you, and you can monitor everything after.
Yeah.
But to sit in front of the computer all day, man.
We talked about that last night. You know how I spent a lot of my time on the daily, and then I set, you know, I just take a glance at a currency. If it's not headed to where I feel like it's going, I'll look at something else. And you know, if I'm looking for a specific level, I set an alert. You know, you can set an alert and walk away, and you don't have to be actively staring at that chart until your alert's hit. You can you know, you can get away from it and, you know, either work on something else or actually step away for a minute, so you're not staring at the screen for an extended period of time, because you know the constant flow of information is kind of addicting at times.
Sure. And if you think about the big picture, you know, how do you most efficiently use your time so that you maximize your result? What I'm trying to do in my trading is, if I could do it, I try to figure out how little work I can put into it and make the maximum amount of money. Now, I told that to a coaching student of mine when we were first starting out, or before he even hired me as his coach. And I said, yeah, you know, he said, so what's your philosophy? I said, well, my philosophy is to work as little as I possibly can to make the maximum amount of money I can. He goes,
work smarter, not harder.
And he thought, well, man, if I had your skills, I'd be working 24 hours a day. I said, if I were working 24 hours a day, I wouldn't make any money. You know, there's a balance that you have to choose. And because there's so many other things that you have to bring into trading. It's not all about just sitting there and then trying to execute trades on a strategy. That's like a, man, that's an early grave.
It's a prison almost.
It is. It's a prison. It's awful. So what you need to do is you need to develop a systematic approach. And I talked about this a little bit yesterday. And you need to allocate your time appropriately, and be able to then, once you've come up with your strategies and the way you're going to approach things, the most important thing is to figure out whether or not you're doing something good or useless. And so periodically you need to measure your results. And if you're doing something different all the time, if you're just approaching the market with this kind of idea of a strategy, and then that doesn't work for a bit, so then you go and choose another strategy and you try that, and then you're searching for this indicator or that, and then at the end of a month or 2 months or 3 months, you look back and you look at your performance. Okay, you can judge that performance. But then if you then go on to the next 3 months and then you look at your performance, how do you compare that performance to the previous 3 months? So if you don't have any baseline from which to judge yourself, if you don't keep anything rock solid, steady in terms of your process and your strategies, how can you tell what worked and what didn't work? It's kind of
It's very true. I think that's probably overlooked in a very, very, very high percentage of people out there in trading.
It's overlooked by all the losers, which is most people.
Yeah, that makes sense.
And so what you need to do is you need to come up with some sort of system, a framework in which you fit your trading philosophy, your strategies, and your work ethic, your lifestyle. Everything has to kind of fit into there, and it all has to be encapsulated into this big project plan, so that you can then evaluate yourself or do a retrospective on a periodic basis, and then figure out what you do right, what you do wrong, so that the next campaign that you put on, you can then enact those things, make changes, tweaks here and there, and then go on and then make some improvements, then measure yourself again. And then you keep on doing that over and over.
That's solid advice.
Yeah. Eventually what you want to get to, it's one thing that, and look, you can't expect to be making money all the time. The idea that you're going to be producing some regular amount of income, and this is what most people expect, I made $5,000 last month, but the month before that I was down 3,000. Then I was down 6,000. Then I made 15,000, and they think that they're running roughshod. But if they have a strategy and a framework, that could be okay, right? As long as you understand what you did. And then if you look at it in the aggregate after you've done a half year, or 3/4 of a year, a year and a half, and then you start developing some consistency across that, you'll start realizing that you're not winning every month. You're not, maybe you do okay some months, and you have a few months that are just outstanding, and most months that are flat, and maybe a couple months that are down. That's more the reality of the situation. But doing it without having any kind of forethought or understanding of what you're doing or any way to measure it will give you useless results. You won't be able to use that data. But if you do something that's consistent and predictable and steady, then you can take your results and then look at them over a longer period of time. Goal really in trading isn't to make money, it's to build wealth, right? So you need to figure out how you're going to structure everything that you do for that goal, for that purpose, to take money out of the market and build wealth, and do it on a consistent basis over years. And this is really hard to teach to people that are just getting involved in crypto, because that's not their experience right now. They've drunken some unbelievable psychedelic drug that put them into this fantasy world, think that they're going to make money all the time and everything is 1,000% winner.
I think anyone who trades stocks too during this epic bull run probably
sure
didn't help.
Yeah. Yep, absolutely. I actually called the low of the market in 2009 March, and I have it documented on Seeking Alpha. And I called it to the dollar, 666, but I called it 5 months in advance. And I'm not saying that, I'm not doing this to sort of pump my chest, and I'm not saying that I did any kind of special predictive powers, but I used some TA methods, and admittedly I also used Fibonacci, which I'm not a real fan of, to tell you the truth. And it was almost like a joke that I did it, but I did it. In November of 2008. Actually, October of 2008, I called the bottom. I did a podcast and I wrote an article in Seeking Alpha, and I called it to the dollar. And then that's what happened. It came right down to 666. And I was thinking to myself, man, if I were for real, I would have bet that. I would have gone all in right there, but I didn't. That's how it was a joke. So, I mean, people that are making calls and they hit things on the button, the only thing that matters is whether or not they actually acted.
Right.
Right. The one thing that I was kind of pissed off about, though, was that no one recognized that I actually did that. Even some people did and went around, but how many people actually called it on the to the dollar 5 months in advance? I thought that was kind of cool, and that made me feel good, right?
Yeah,
I would think you'd be on the TV.
Yeah, you would think so. You would think.
There should be a movie called The Man Who Called the Block.
Yeah. And, you know, and I have proof, you know, I have, you know, documented proof. But the only proof that really would have counted is if I had, you know, loaded up the truck and bet everything on it, if that was the bottom. Right?
That's the whole, you mortgaged your dog and went all in.
So the only thing that really matters is what you do and what you take out of the market and what you keep. And that's what your trading should be all about, and nothing more. I have this one, you know, mantra that I use. It's capital preservation first, profit second. But unfortunately, most people are exactly the opposite. They're thinking about profits first, and then worry about what I'm going to, you know, take out of the market, how I'm going to hold on to it. And actually, most people don't even think about how they're going to hold on to what they win. They just keep on upping the bet, going in with bigger position sizes, and eventually give it all back and then try to start all over again. And they're hoping that they'll do it bigger next time. And they'll have so much more on that next win that it won't matter. They'll be able to take a portion and put it away, rather than just thinking about maybe that should be your first goal up front. You know, maybe it's a little bit different way of thinking.
I really like the curating your hypothesis aspect.
Yeah. So
I think it's really like the science out of me.
Let's see. I don't know if I can share something on here or not. Can I do that with TeamViewer?
Yeah, as in, like, is it on the browser or?
Yeah, share a screen or I don't know where I'd have to be. I guess that, can I do that?
Since you can just use a different tab. You're just in Chrome. If it's full screen, just F11, see if we can get it out.
Yeah, okay, so it's not in Chrome, but no, I'm just wondering how to do it. Well, I don't want to, you know, bog it down, but
What's the source?
I have a PDF.
Okay. Do you use OBS at all?
No. What is OBS?
That's like the broadcasting software we use to broadcast our stream, basically. Usually with OBS, you add a source, like an image or a file, to be on the scene that you see on the Twitch side of things.
Mm-hmm.
Is it a link to a PDF or just like on locally?
No, I just have a PDF, local. I have to find it first.
Yeah, you could. Can you add an attachment in Twitch chat? I don't know. I didn't think so.
Yeah, where did I put it? Yeah, strategy development lifecycle. That's what it is. Nope. Not it. Ah, here it is. Actually, I have just a graphic. Maybe I could open that up with the browser.
Yeah, perfect. You could do that.
So you think I should open up in Chrome? I'm actually showing Twitch in Safari right now. Should I open up with Safari?
Yeah, let me connect to the TV real quick, and I'll show you where we can put. Since we just had it full screen, so you couldn't see the address bar up here. But yeah, if you wanted to open it into one of these tabs, every tab you're seeing right here, that's what we're showing on stream.
Every tab, where I'm seeing what? I'm sorry.
On the TeamViewer.
I'm sorry, I'm so dense here. You know.
No problem. What we see on TeamViewer, that's what people are seeing on stream, with the addition of a couple of like overlays and stuff.
Okay, so there are tabs.
So you're seeing, you see this right here. This is the OBS software. Actually, this is how you get everything together, and this is what Twitch sees.
Mm-hmm.
Like the logo, the ticker, all that good stuff. So here, if you had a local file, you could add an image to the source, and then we could, show it on screen. So you can go about it through OBS, or we can open it through Chrome.
Okay, so how would I do that? So I would open up Chrome, and then can I open a file from there? Can I create? I can create a tab, right? Here's a tab. Now, how do I show? How do I open up the file in there? Can I just drop? Can I actually drop it on there? That would be cool.
I don't know if you can drop it into the team viewer. We can give it a shot.
You can't.
You can. Team viewer is should be paste, and you can drag and drop files in there.
Here, I'll message you on the Discord account, and then just give it to me through Discord. And the whisper.
Team viewer has detected a keyboard shortcut. Forward shortcuts. That's not what I wanted to do. So you think I should, maybe put it into Discord?
Yeah. That'd probably be the best way.
All right. And so what channel should I do that on?
The lobby should be okay.
There's the lobby. No, it's not letting me.
Let's try sending it to me. It's such a hassle here. And we should just be able to drag it and drop it one day.
That's what I tried, yeah. Okay, so
I don't think it's just a feature. Yeah.
So
is it too big? Is it oh, there we go.
No. Shouldn't be too big.
Perfect.
And then can you display that on TeamViewer?
Mm-hmm. So it gives us a Discord link when I open it, and then we can just put it here.
Okay. Cool.
And then if you want to get back to your chart, I'll just move it next to it. Oh, no.
Whoop.
There.
Okay.
All right, I'll hop off.
All right. No, this is great. They want me to buy a license. All right. So I developed this this graphic here, and there's actually this is part of a person that I offer on automated trading. And this is simulating this big cycle that I was talking about. Boy, so I just hit that. Oh, there we go. So this is simulating this big cycle, this campaign that I'm talking about. And from an automated trader's point of view, which would be very much like any kind of systematic trader, you need to have a constant churning of strategies that you're considering. And I put them in something that I call the curation bin. So if you have any kind of skills in programming or anything that can help you kind of codify your strategies, or you can just keep track of them and monitor them. But that's what this curation part would be. You spend most of your time in kind of development of your systems, your strategies, your ideas, your research. And then when you find strategies that you think that are worth looking at, you put them into curation and allow them to run and visit them periodically to see whether or not they're things that you want to then put into what I would call production or into your live campaign. So I know that this is way beyond what most people are thinking about. They're just thinking, hey, give me a friggin' strategy. I'm going to just run that strategy. And then when it works, I'll come back and I'll give you kudos. If it doesn't, you're a dog to me. Right?
How do you learn from that?
Yeah, right. You got to go way beyond that. What you need to do is, like I said, you need to run maybe a long-term, medium-term, and short-term strategy. Maybe up to 4 or 5 different strategies. Maybe have 10 strategies that. Now, that doesn't mean that they're all going to be running simultaneously, but they'll be part of your campaign. And you put them in curation so that you can watch them while and see whether or not they would produce any kind of good result. Why would you then, take a strategy that someone gave you or you just discovered and then put it right to work? How do you know that's going to make money? What if that strategy is a loser? Are you willing to take that chance just because someone said it was good? Maybe a lot of people are sort of stepping back and saying, but that's what I do all the time. And if you're winning, it's not, you're incredibly lucky, but most strategies don't make money, quite frankly, or they only make money under certain conditions. And so you need to develop like a stable of strategies, simple strategies. They don't have to be complex, that you have in your curation that are just running all the time that you can then draw on. And then when you're ready to start a campaign, you choose the ones that you think are appropriate for those market conditions or this time, or ones that you think are most uncorrelated to each other, because that's a key. It's a key characteristic that you want to do. You want to make sure they're uncorrelated. In other words, they take their directives and entries and exits and everything from completely different cues, and so therefore their rate of returns is going to look very different. And you can actually test these statistically. You could, if you keep good records, you can test this, and you can use something like the Corel function in Excel, and create a correlation matrix and see whether or not your strategies actually have correlation to one. And if you can run uncorrelated strategies together, you're going to have a much better chance than not of producing positive results with low drawdowns and fairly good, nice smooth equity curves. So you set your campaign going, say, like I had suggested before, 3 months or so. You pick what kind of assets that you want to go after, what strategies you want to run, how much capital you're going to allocate, and you kick off your campaign. You should be spending probably, 15% of your time kind of tending to the live campaign, the strategies that you actually have. What I'm saying is 15% of your time should actually be doing trading. The other 85% of the time should be spent doing something different or not trading. I'm sure that sounds like a very foreign concept to most. So think about that. If I'm trading, say 20% of my time I'm trading scalping or short-term trades, that's all part of that 15%. And then maybe 35% of my time I'm spending doing swing trades, and then the rest of the time I'm doing longer term trades, or however you want to mash it up, I guess. And or you can allocate that amount of risk each one of them. It's probably more appropriate than time. And so you're spending that 15% of the time managing your trades, these different strategies. You're spending probably another 15% of your time managing things that you have in curation. And then you spend the rest of the time in development. And that is searching out new strategies, figuring out or planning out your next campaign, analyzing how your stuff is working now, both in the live campaign and in curation. This is how a pro trades. And I think I had said this yesterday, and I get this. I'm repeating this from my mentor. He said that trading is the hardest thing you'll ever do to make easy money.
Epic Times for All asks, how do you develop your strategies?
Well, you can get strategies from anywhere. The easiest way to do it is if you have a little programming capability and you have Ninja charts or TradeStation or something that you can test or codify the strategies. But typically what you want to do is I create what I call a strategy factory, where I am constantly searching for ideas, and I'm reading books, looking at the markets, looking at other ideas, going through websites, whatever. and I find strategies that seem appealing to me, and I try to get a good mix of them. And then I test them, I develop them, and then I put them into curation to see how they work. Ideas come from anywhere. There's probably an unlimited or an infinite number of places where you can get an idea for a strategy. The thing that makes a good strategy is that it's simple, easy to understand. That you can probably explain it to your wife or to your mother, maybe. Or you can explain it to anybody else in a couple of sentences. If it gets much more complex than that, that's probably, unless it's something, truly special. And I have strategies like it's probably best to avoid it and go for simpler is better. But generally, you want simple strategies. I mean, you could look at a book like from Alvarez and Connors, I think it's called Simple Strategies That Work. There's in that book, there's probably about 30 or 40 different strategies, both entry and exit strategies and ideas. In general, some of the ideas that they have there are, a lot of people like to trade breakouts, right? And people think that breakout strategies are really cool. Well, under what context do you choose a breakout strategy? Or you just look for breakout everywhere that it seems like it's setting up? So that will make a big difference in whether or not a breakout strategy works. I think I talked about yesterday too when I mentioned my oil status report breakout strategy. And that's a strategy, though, that is employing a very simple breakout methodology, waiting for something to exit a channel, right? But, you would think, well, I can just apply that anywhere. Anytime I see that channel and it breaks out, I employ that strategy. No, wrong. I only do it when when it does that after the results of an oil status report, because that's where I found that there's an edge. So virtually all strategies should have some kind of hypothesis behind them, and that gives you a definitive edge. And that strategy will work much better and more often and more reliably than just trying to take your TA method and call that a strategy and just apply it to just about anything. It's like a solution looking for a problem. So you find these different strategies. So I was getting to breakouts. Breakouts are an effective way, but they're not as good as pullbacks. So in a trending market, a pullback has a pullback strategy has a much higher degree of probability and a higher average return on capital than any breakout. Breakouts are piss poor compared to pullbacks. You can improve your strategies by only taking longs in a bullish market, or only taking shorts in a bearish market. How do you know the difference? Well, either you're above the 200-day or you're below the 200. That could be an easy regime change. These are just ideas I'm just throwing out. And so you develop all these strategies. Like I said, the ones that have strong hypothesis behind them that actually identifies an edge will be better than just your standard TA strategies. Most people, that's what they want to use. They think that you're going to use TA and apply their TA to any chart, and they're going to identify opportunities and they're going to make money that way. That's like the most foolish way to trade I can possibly imagine. Yet that's what everybody does. Because you're not putting the odds in your favor. And that's the key. You want to put the odds in your favor as much. Why would you trade a strategy where you know for a fact that you have about a 50-50 chance of it that entry out, and you're going to rely on your ability to be able to manage risk? That's stupid. I'd rather get into a position where I know that if it breaks there, that I have maybe a 1 to 10 risk to profit ratio, based on my strategy and where I'm placing that entry and so forth, rather than something that's going to give me 1-to-1 or 1-to-2, and then hope that I can manage the risk. And on top of that, really, I'm getting in it at any time I see the the signal, rather than taking it on a cue of something fundamental that will give you a much better chance at profiting. Like I said, it's a lot of work, but you put the work into it and you find these strategies that are based on solid fundamentals, and you use your TA to model the fundamental, and you wait for that opportunity, and then you hit it. And instead of, looking for a 1-to-1 or 1-to-2 return, you're looking for 1-to-10, so if it doesn't work out, then okay, no big deal. And if you have all your strategies are like this, you can see the benefit of it right away. I mean, I'm only trading things that have a 1-to-10 return on them, as opposed to a 1-to-1. I'm not spending all my time trying to manage my crap. In fact, I may not even employ stops or any other type of risk management at all. I'm kind of hinting there. It's kind of like what a pro does. He doesn't spend all his time setting stops and managing the trade, managing the risk. Yet that's what everyone's taught to do. And it's simply ineffective. I know I'm not showing very much out here, but anyways, that, I don't know if anybody's still on here and you have any commentary on what I've said. It obviously all makes sense, but do you want to spend the time to actually trade like? Let's see. I'm looking at the chat. The screen is burning some eyes. Dark mode. All right, so we'll go back to. That wasn't the one I had up, I don't think. There it is. Hopefully that's better for you. You guys still online?
I'm back. Sorry, I had to make a drink.
Oh, that's okay. I don't know. I think what I'm talking about for a lot of people is, it implies a lot of work. And I don't know if people are willing to do that kind of work, to tell you the truth. But, when I look at Bitcoin, I said I started this all out by how I would approach identifying or marking up my chart to identify opportunities. So with Bitcoin, I've developed this overall narrative. Right now, it's obviously bearish. Some people might say it's bullish, but I'm looking at it from a long-term trending point of view. We're definitely still in a downward trend. There's no doubt about it. Unless we break above, say, 11,000, 12,000, I don't think anybody can deny that we're still in a downward trend.
I would agree with you there.
Yeah. And so, that's my downward bias, and I'm constantly monitoring the fundamental factors that affect Bitcoin. Right now, it seems to be the number of people that are actually participating in the market, the regulatory issues, new technology or new stickiness of technology or awareness of that technology, more, all of those things kind of come into play. And I haven't seen anything really change that alter that. I think a lot of people were hoping that consensus was going to, spark a light, but it was nothing but a downer. And so that, to me, that just contributed more to the bullish, to the bearish sentiment. And so from that, I would say that, okay, I'm about, 70-30 bearish bullish. And so I would use that as kind of like my overlay onto any kind of opportunities that I see. So if I saw a in the market, we're at 82.95 right, and I'm looking at that and I'm thinking, okay, we could either go up or we could go down, and I'm gonna say, well, because we're in this bearish market, maybe there's a 70% chance that we go down and a 30% chance that we go up. That's how I would apply my narrative, for instance. And then I would add my volume profile, and I would proceed to create the structure of the market. And well, I'll do that. Visible range.
Oh, I was going to ask you a question about VWAP. Do you ever use
volume weighted average? Yeah, it's it's an effective tool, but it's also a lagging indicator, though.
Right.
If you can develop a strategy around that and apply it, to your idea, your hypothesis, and it works, that's great. I think anything where you use both price and volume is better than just using price. So and I know there's a lot of people. I have a friend who's actually a professional trader, and he uses that's all he uses is VWAP. That's his primary indicator, and he looks for stocks that are setting up according to his sort of fundamental view of, and then uses VWAP as his kind of entry.
Yeah, it's an interesting how it plays on like usually within a daily. But yeah, some people do trade around it. They don't buy above VWAP or sell below VWAP.
Mm-hmm.
Is the general consensus, I guess, around that.
Right. So let's see. Can I close this right-hand side? I don't know if anybody cares, but I'm going to do it anyways. So this is the whole chart view. It is showing me a volume profile for the entire chart, and from this I can pick off what I perceive as the areas that the market has found value, and those are all the high points. Now, let's see. This yellow line is supposed to be the POC. The POC is the top high point, but I don't think it is. I don't think this yellow line actually is part of this chart, is it? I don't even know what it is.
Is it our POC maybe?
Yeah, it looks to me like this red line is the POC. I don't know what this is. What is it? Oh, I guess it is part of this chart. Maybe it is the POC. Is this just a line? Yeah, I don't know what we're seeing.
Yeah, I think because of a new layout, so everything's default.
Yeah. So the first thing I would do is I'd draw horizontal lines, because that's going to show me its structure. Now, what a lot of people will do is they'll actually create trend lines and try to connect the dots, try to connect peaks and valleys. And that doesn't really show you anything. You think it does, but it doesn't. Where those lines sort of connect, those peaks and valleys, and where price actually crosses over and crosses that trend line that you artfully placed, usually corresponds to either a high value node or a low volume well on the profile. Well, almost always, that's exactly where it is. And in fact, those are the inflection points that appear on your trend lines. It's not the trend lines that that price is breaking through at all. It is these low volume wells and features or the structure of the market and the behavior that it has through those. That's what it's reacting to.
And
because, I'm sorry?
You're saying those are basically horizontal
Yeah.
levels. You're looking at not diagonal or
right
or anything like that.
So, I'll put one here.
I think default yellow is the point of control, and then the yellow red dotted is our current price line.
Right. Let's see. I can double click on this, and maybe I have to right click.
Oh, so right now it's in drawing mode, so it's laying a bunch down. There's about 5 on top of each other, I think.
Oh, really?
I think so. Yeah. You can just mash delete on a bunch of those. But on the left side under the magnet, it's stuck in drawing mode, so it will continuously paste what tool you had.
Oh, okay. So I'll just I have to right click on them to the delete key's not working.
Yeah, so you got to go to the left on the tool side to uncheck the to lock drawing mode. It's under our magnet. There you go.
All right.
I think the issue is multiple people use this trading view, so sometimes some of the tools cross over and get locked while we're using it.
So as a general rule, what I do is I make my my high value nodes red and solid, and maybe something like that. And then place them where they need to go. And then I make my low volume wells blue and dashed, just so that I can very easily see the difference between them.
Hey JB, how's it going, man? That Tron move is finally coming to action. A couple months too late, huh?
So from a long-term time frame, I'm not going to put anything up here because it's really nothing going on up here, and I don't expect to be up there anytime soon. So from a longer-term time frame, the market structure, you know what? I'm going to get rid of this volume. It's kind of getting in.
And just to touch on that real quick, you mentioned you're not really looking for anything above that, and that's above basically the 11.6 and 11.7 range, where Bitcoin hasn't been since before the beginning of February.
Yeah, I'm not really interested in anything above there right now. I might want to put, because I don't expect it to go up there anytime soon. If it does, I can readjust my chart and I can add to it.
And I feel the same. I've talked about this, many times since we've finally hit those levels. I'm looking for daily candles closing above that level continuously until I feel like we're in some kind of reversal potential and finally in an overall bull market. So I'm kind of glad to hear that you're feeling the same way and kind of looking for the same thing.
I look at it from an odds point of view. The energy that it's going to take to go from this POC to this high value node up here at about 10.8 is a tremendous amount of volume and energy to bring it up there. And before it even gets up there, it's got to move through, what appears to be there are actually 2 high value nodes here. There's the POC and another one right above it. And there's a number of low volume wells right in between here, for instance, that are going to provide significant impact on the behavior of price as it moves through the structure. You can almost think of this structure like a 3D landscape, and these high value nodes are like quicksand or big hills or rocky hills, and then low volume nodes or volume wells are like flat plains where you can just really scoot.
The price just soars through that level is what you're saying, correct?
Yeah, but actually price is going to behave one of 2 ways when it gets to a low volume well. Either price tends to be rejected, so it either comes up to it and rejects it, or it comes up through it and scoots right through it. It just doesn't want to hang out there. And you say, well, how do you know? I said, well, because that's the way it's behaved every time it comes to that point. It's not like, how do you know? It's just an objective observation. So now I have a general idea of how I think price will go. I have this sort of 70-30 bias. So if I have 2 high value nodes that are equal distant apart, like I have one down here and I have one up here that are approximately, almost, equidistant apart, I would say that there's a much higher degree of probability that I'm going to come down here than I'm going to go up here, only because of my overall bearish bias. I'm not trying to inject here my hopes and dreams or what I believe You know, the market doesn't give a damn what you believe. It only really cares about where it is and what pressures are on it and what, you know, what market forces, what's the supply and demand, et cetera. You know, and until that big picture, that fundamental picture changes, you know, and maybe changes me from 70-30 to maybe 60-40 or 40-60, I'm going to put more weight on it going down than going up. But that doesn't mean that I'm not planning on it going, because, you know, there is a chance that it will go up as well. There's that 30% chance. So I have to, you know, plan for that as well. So every move, every, you know, every trade that I make, I keep that kind of in mind, you know. So if I were trading long term here, I would definitely be, you know, going bearish and hold the bearish view. If it starts going up, you know, I'm going to have to think about that and figure, well, how high up am I willing to let it go before I feel like it's a failed trade, or I have to reevaluate and maybe go with the trend, you know? So I'm thinking about that type of scenario with virtually every trade that I make. Now, the big difference in what I'm doing here and what maybe other people are doing is they're concentrating on this one trade. This might be just one of many trades that I put out there. And I'm trading really, really small every single trade. So I put this trade on. If it goes against me, it's not going to kill me. If it starts going in my direction, then I might add to it. And then, you know, as it is sort of fulfilling what its statistical destiny is, you know, I will add to it because there's a much greater chance that it's going to continue doing what I want it to do. And so that's, you know, from a very high level point of view, that's how I trade. Then I'll go down to smaller time frames. So I'll look at the 4-hour. Now, the cool thing about TradingView is that when you draw a line that existed in the 24-hour, it will also show up in the lower time frames. So even though it may not show the height and extent of the volume node that's there because it's no longer in view, the line remains. So I guess this is the POC, this yellow line.
Mm-hmm. It can be changed or removed if you want.
Yeah, but when I get down to this level, I'll either create a new chart from it, or I'll just add more lines to it. So I might add, you know, more high value nodes. Didn't work. Did that work? No, control key doesn't work. To duplicate.
Yeah, I think TeamViewer has some kind of interference from hotkeys and other apps.
Yeah. So I'll just clone it. Is there a clone?
I think, is it Control H maybe? I'm not too sure if it has to be selected first.
Yeah, I don't know. I don't even. Okay, we'll try it. Control H.
Yeah, I don't think it's going to work.
Nope, that didn't do it.
That's our price level, right? What we're trying to get.
All right, I'll just, you know, I'll do it the old-fashioned way. And that should be a red line. And we'll make it solid. So I just repeat the same process that I did in the bigger time frame. And then I'll find these low volume wells, and these have to be a different color. So just change those. And the reason why I'm putting these here is because they're going to give me some clues about how price is going to behave as it crosses these lines. When I get to high value nodes, I have a tendency, price has a tendency to attract price, and it wants to go there and then auction back and forth. There's some stickiness associated with the high value nodes. And then, as I said before, the low volume wells reject price. So, given this and with a little bit of experience, I can start mapping out where I think price is going to go with a number of different scenarios. And I would probably just do that by drawing arrows here and where I think it will target. You can use these high value nodes as targets. You can use these low volume wells as entry points for trades. And
that's, I did mention that a lot of, you get people, I'm sure you do too. You get people asking, what's the entry? What's the exit? They just want a straight up trade, financial advice.
Yeah. Everyone wants the quickie way, right?
Yeah. And I try to preach, and, if you can find these levels, where the market is trading at, I mean, that's how you can identify your, a potential plan and a strategy when identifying these levels. So
yep.
If you guys aren't taking anything away from this, I implore you to listen and even write down and really listen to what Ernie's saying, because a lot of these strategies are very similar, to what I show you guys in the trading style I've tried to learn over the time. And what he's saying is very very correct, I feel, when it comes to identifying levels of support and resistance, essentially.
Mm-hmm. Now, I don't always use just the full view profile. I find that kind of limiting sometimes. And now here's the thing. It's showing the full view. It's showing things all the way back to here, to the 19th of April. One would think that even though these high value nodes and low volume wells, they are the result of people actually taking trades, either shorts or longs or whatever they happen to be. And they exist all across all the different points that they intersect with these price charts, right? And so they still exist to this day. Some of them don't exist anymore. A good portion of them do, and that's why price starts acting the way it does when it comes across them, because there are people there that are literally affected. There's supply and demand there, and they're literally affected by those positions that they have there. They either want to defend them or take profits or exit or whatever it happens to be. So that's why these the profiles are so important, because they really do dictate to a large extent. I would say about 70% of the movement that price is making is being influenced by this profile. The other 30% is being influenced by news, maybe a longer term time frame players trying to push the market up to another region, try to find value, and a lot of other influences. So you got to kind of take all those into account as well. So right now that's how I look at it. Now, because anything that's closer to present day is more likely going to have a stronger effect. So in other words, a high value node here that originated from these price changes here are probably going to have more effect than, say, volume that was put down back here on April 19th. So you have to kind of factor that in a bit, that older volume tends to be a little bit less influential than newer volume, only because it may not exist anymore. Mostly that's why it may not exist anymore. So for that reason, I like to use also the fixed range volume profile, so that I can get a better view of where those POCs are, and those high value nodes or areas closer up. So I'll create a fixed range. I'm going to simplify this a little bit. I don't like the up down. There's really no need to see both the selling and the buying in it. I think it just confuses things. it's a little hard to see, but this has its own POC, has its own high value area, the dark area. And so that's going to tell me, where 70% of the price is likely to fall is going to be somewhere in the range that's in that high value area. Sometimes I'll draw like a rectangle or something to kind of point that out. Let's see. Right.
Mm.
So I know that in this area, at least in the last few days, that's where 70% of the volume has occurred. So you can use that from doing rough statistical guesstimations, right? You can look at that and say, if I'm right in the middle of that range, there's probably a 70% chance that any movement over the next few days is going to fall somewhere in between there. You can say that because it's true, or that's what it's been doing.
Do you use the VPSV at all? The volume profile for a session value, I believe.
I would if it were in a market that that respected session.
True.
But the 24-hour nature of cryptos doesn't really respect session. I'm more interested in where the consolidation areas are. So if I were, doing stocks, that would be a much better example where I might want to use the session. Because, they're closed from clock to the next day at 9:30. So why, who cares about those times? So the other thing is that you'll notice that there are patterns that develop with these mini profiles. And a lot of times you'll see a profile here. They'll get kind of like right there. You have a little profile, and then it comes up here and then does a little auction. And it comes right back down to the POC of the previous profile. So that's a common pattern that you see happen a lot, where you have this sort of one profile called balance. Balance is taken from market, if you're familiar with that. And you have this balance that occurs, and a very mature balance will be one that goes across and consolidates a lot, and then this nice, bell curve looking profile. And then it often will be the case where it will try to break out of that balance. It will create a small balance above and then return right back to the POC of the previous balance. That's like a pattern. If you go and look, you'll find that pattern occur probably, I don't know, 70-80% of the time. And so you can develop strategies around that. And a lot of times what happens is you'll have that balance. It'll come up and create like a satellite balance, then come back down, but it doesn't stop at that POC. It'll shoot right through and then go all the way down to the extreme, the end, where it turns around. There's a setup for you, right? So the setup could be that you wait for this to happen, this balance, and then take a short right at either the upper extent or at the POC of this satellite balance, and use the POC of the bigger balance, the daddy balance, as maybe your first target, and then your second target being the extreme down below. It's just an idea. But once you start, looking at the behavior of these things over and over, things happen over. And you can take a shot at these trades, and a lot of times they work out, and they have really good risk to return. I mean, your risk is maybe this blue line, and your potential profit is way down here. So from here to here is only 100 points, but from here to here, I can't see it, but I'm going to guess that it's probably more like 500. There's a 1 to 5 risk to return. But you wouldn't take that unless you were confident about your fundamentals, what the overall fundamental picture of this is, and you know, where you are in those nodes, the patterns that develop, you know, all of that stuff kind of comes into play.
Crypto Tech Junkies is asking you, is the VPVR POC viable for bounces, or do you target the bottom of the value area? I think you kind of did explain.
Yeah, I mean,
I think
you're
touched on that.
obviously extremes are the best place to use as places where you do entries. POCs are good for targets. Going from extreme to extreme is probably a good place to take another target. Often it will go through that extreme and then go down below that and create another balance. And if it does that, that would be another good target. So, you know, and it's also knowing the thing that you're trading, and you know, I can look at this and I can tell you right off the bat that there's a lot of patterns that are in here. I see the pattern that I'm talking about at least 4 times in this one chart. You know, I see it here, I see it here, I see it, well, here upside down, I see it here, and not so much here. This is kind of an extreme view. That, you know, so these patterns occur over, and if they occur enough, they're probably worth trading. Of course, you know, I would want to put everything in my favor. If I thought that we were super bearish, then, you know, I would say that this trade here, once I got up here, that's a real high probability trade that we're going to come down, probably hit that POC right here, and then zip down to here. You know, I would give that a very high probability, because I know that this happens, you know, probably % of the time, that kind of behavior, and we're in a bearish environment, so that's going to give it some extra oomph. If I could bring a little bit more of the chart in.
Yeah, for me, if you're looking at these zones and it continuously gets rejected from that 10K level, and then even the higher nodes on the way down, it just seems like it's at least for me returning to the start of the move, basically like a 2-month time frame or something like that, at the beginning of the move up from mid-April, it seems.
Yeah, if something's, you know, getting rejected over and over, 2 possibilities: either it's going to break through, because usually after it's been rejected 2 or 3 times, if it can't break through, then it might go the opposite direction. But there are cases where, you know, that's what it needs, you know, to break through it after it's hit it 2 or 3 times. So I don't know what the rule is, or what it depends on the asset that you're looking at, what its behavior is, what the current market conditions are, what your overall narrative is, your bias. To use that as a kind of a sort of a general strategy, I would say that you have to put it into context, you know, trading. That's been my experience.
Exactly, and it seems to be working for me.
Yeah,
within this move.
So I've developed a strategy, you know, since we hit up here and came down here. Well, actually, since we made this initial move up, I thought that this was completely manufactured. Really, all the way up to here was completely manufactured.
I wish I might have to pull the VOD from that day, because I pretty much said this looks this looks fake.
Yeah.
You know, I had my tinfoil hat on at the time, because, you know, where we were at the time, that 6,800 level was kind of spooky.
Mm-hmm. Well, if I get my channel back, you'll see that I started producing videos right around. I produced many of them where I said short every rally. And that's been a pretty big mantra of mine since this time. And I
have to go back when that happened.
Yeah, I basically, well, I think I saved a couple of, and in fact, the one that I saved as the intro, the what do they call it in your YouTube, your theme video or your intro video.
Oh, right, the one that's pinned, so like for new users or subscribers to view.
Yeah, can I go to there?
Yeah, no problem.
All right.
Yeah, if anyone's wondering where you can find Ernie, aka Trader of Futures, his Twitter handle's at TraderofFutures. His YouTube channel is this new one he's going to show you here. We do have links for that as well.
Oh wow! Look at that, come up right up near the top again. That's good because for a while there, when I got the new channel, I wasn't coming up the top. Of course, my old channel, I had so many subscribers that you know, you could put in a wide variety of terms, and I would come up the top. But normally, I would come right up to the top here. But so I'm encouraged that after a week's worth of work. So this. I took this out of sort of, I did this video
This is ridiculous.
in anger because, and in that video I talk about shorting every rally. So I put that up there as that, you know, my finger to the market intro video.
No, you're not taking Ernie down. I mean, that's a nice try, but you know, we've got people to help him out here.
Yeah. So anyways, I've been saying, you know, short the market on every rally for the past, I don't know, several weeks, and it's worked out pretty good. And I'm going to keep on doing it until it stops working.
And that's what you talked about earlier. You're taking this style, putting it into actual plan, and getting data over time if you know if it's successful or not.
Yeah. Yep. And sometimes you catch, you know, a couple 100 points. Sometimes you catch 50 points. Sometimes you catch 100, 200, 300 points, you know, 400 points. But yeah, and pretty easy to use the volume profile to kind of predict where the rally is going to go to and then where you want to take your short. You can see that every time it's rallied, it's always rallied to a POC.
And some people will say, well, how do you know if it's going up or down from there? And I think they have issues with maybe identifying the overall trend. And even though we have talked about it and do talk about it.
Well, that's why I started off with that. I said I develop the very first thing that I do, and the thing that governs everything that I do is my overall narrative of the market, my bias. That governs everything. And look, when we had this little bullish run, people were, you know, screaming at me, you're wrong, Ernie, blah, blah, blah. And I said, well, I'm wrong right now, but I'm going to be right.
Right.
So what happened to me was I was still short down here. And then we had this, I got out of it, you know, I don't know, right around here or there. But people were thinking that I got wrecked, right? Because I actually was short like 20 Bitcoin. But I only was short for, you know, 700 points, which is a lot, you know, it's a lot of money.
Yeah.
But compared to my my overall capital, it was relatively small. So okay, so I drew down 3%. And I had increased my bet, and that's where I was, because I was pretty sure that it was going to continue down, and had it continued down, I would have really been banking it. But I had been banking it already, you know, shorting the market. And so I lost there. And then people kind of called me out and said, oh, yeah, you're a fool. You lost. I said, okay, yeah, I lost 3% there, but I gained 40% on all the other moves.
Yeah. You have to realize that you probably would have been trading this move since, you know, the beginning of maybe even March or something. I think I've been watching that move from I think 83 all the way down to 64.
All people see is your last thing and then think that defines everything that you've done.
Yeah. Yeah, it is very true.
So, and we went over, you know, why I thought that this was fake, and the behavior we were pretty much in alignment there. And there were actually, you could see it on all of these. I mean, the thing is that all of this stuff went up on very low volume, or happened within a time frame that was obviously not. It's not like we had this sort of mass simultaneous psychosis or thought in everybody's mind. They all decided to push the buy button at one time, you know, and every single moving it and pushing it up all the way up to that 10,000, exactly that kind of trade. And so people are thinking that, oh, we're getting bullish now. Blah. And I'm saying, yeah, but you guys didn't do it. There was like a handful of whales that did it.
The whole time during that, it's like, where are the bears at? The bears are sleeping. It's like, you guys don't realize that it wasn't like the entire market that decided to want to rally at 6,800 and then suddenly put $9 billion of volume in Bitcoin in that 24-hour period. You know, I don't think anyone discussed that. I didn't hear you guys talking about it. Did you?
Yeah. All right. That's
No
exactly what I said.
No one was planning that.
So obvious to me.
Yeah. I 100% absolutely agree.
So, so I knew eventually it would come down because there's so much money that they're going to invest in this. They had to have an ulterior motive for this. It was helped by the fact, at least in the initial push, that there were so many shorts in the market. Once they lit the fuse, it just went. So that gave them some boost, and then they helped it along the way up. Now, why were they doing it? Why were the whales doing it? And I don't think it was just whales. I think it was also exchanges. Exchanges were hurting down here. If you started to look at the transaction volumes, when we were down here, super low, and they were hurting. They weren't making any money. Nobody was trading. Seems like whenever we get way down here, everyone is like, you gotta hand off, can't trade, or they're like deer in the headlights. I can't believe I'm losing all this money, but I can't force myself to get out of a position.
Yeah.
I think I'll just thank you, sir. Give me another. Whack me. I'm a good Bitcoiner.
I paid attention to the volume because I look at specific periods and movement over time frame, months or so, and looking at the volume leading up to that point, Bitcoin had been doing 3.9, 3.6 billion on April 7th, 8th, and then the 2 days before that it was in the 4 billions, 4.8, 4.2 so billion. Then suddenly there's 9 billion out of nowhere. It's just I don't remember.
That was the highest volume day in Bitcoin history.
It was nuts.
Yeah. And like all of a sudden, when everyone was down in their dumps, they all decided that, this, like I said, a mass psychosis epiphany that everyone said, oh, it must be bullish time.
It's over. Yeah. We found our bottom. I heard that a lot. We found our bottom.
Yeah. Right. And to this day, people are still saying that is the bottom. How do they know that's the bottom? Because they say it, they're willing it. What's the objective evidence that that's the bottom? If I were to look at something objective, I would say that, maybe 1,000 is the bottom, because that's where we started off in this sort of hyperbolic move in the beginning of 2017.
Yeah.
I would, that seems more natural to me. Sure, there are a bunch of more people in the market now, but they're completely on the sidelines. They're not touching this.
And the reason you mention that is because you've seen these market cycles from their birth to a period of time where they're at now, similar to where Bitcoin is.
Yeah.
So I think people probably ask her like, well, how would you know that? And that would probably be my response. Because the market behavior over time, history does, I feel, repeat itself.
As Mark Twain says, it rhymes, it doesn't repeat.
Or it rhymes.
So it's similar.
Mm-hmm.
Nothing is the same. It may look the same, but it's not really the same. There's always something a little different.
And I think some people come up with those conclusions because of what some indicators have said. So that would be their argument for here's the proof, is because an indicator had said so.
Yeah.
And potentially it matched up with a previous move, in like 2016 or 15 or 14.
All the whales that are in the market and forces and all the new products that are coming out and all the people that are coming in, opening up accounts. That's what they're all thinking of. Oh yeah, that indicator said that was the bottom, so I'm going to respect that. Yeah,
they have to wait for the daily cross to pull or withdraw their bank accounts.
Yeah.
Only on that day can they move money.
Yeah, when you place such faith in these things that are derivatives of what is actually happening and things that happened in the past, not what's happening today, I don't know I don't know where you get that logical leap. I just don't understand it. You know, I mean, we're trading in the present. We're not trading in the past. That's what you have to keep on telling yourself. We're trading in the present. What's happening today? What's going to influence me today? Not what happened in the past. You know, the market structure, it may have happened in the past, but it is the situation today. You know, it's like, my neighbor, he dug a hole and put all the dirt from the hole over my fence, and now there's a big bump there. And every time I come over to the fence, I trip over the bump. You know, I'm not tripping over it because he did it in the past. I'm tripping over it because the bump's there today. I don't know if that's
a good analogy.
Yeah, I just, I had to come up with something.
It makes sense. And also the variables, so they're completely different from then.
Yeah, everything's different. Maybe a different time of the year, a different sentiment in the market, a whole different outlook. Maybe government regulation has changed since then. Who knows what, there could be a million things that affect it, but that's why you have to continually update and keep a narrative that kind of gives you your overall feel for what the market is.
I'm actually doing an interesting project with Ethereum to Bitcoin on Poloniex. And this is just basically a time frame trade from April 5th, 2017 to June 12th, 2017. Ethereum had a nice bounce and got a nice little top. And then April 5th this year, it had a nice little bounce, and it's climbing, continuously climbing. I feel like it's losing steam, but we're getting a little close to June 12th. And I feel like maybe I'll close my long then and see how that plays out if that becomes a local top. So it's an interesting little project. I don't know if I'm developing a strategy from it, but it's just an interesting, correlation that I think is just really just circumstance. But
it's probably another, buy the rumor, sell the news type of thing.
It could be as well, yeah.
I mean, that's a great strategy. I mean, that plays out just about all the time.
Oh, that really does. Yeah. Tron is usually tied to that strategy.
Yep. And I think that's what's gonna happen in July. I have a feeling we're going to come down a little bit further, then we're going to drift up into July. And we're going to be drifting up with anticipation of the G20 coming out with their recommendations for regulation. And no matter what happens, whether it's good or bad, we're going to drop, in my view.
Because there's just no buzz, right? There's no talk.
Yep.
That happened similar with the I guess the previous SEC hearing, not the Ethereum one, but I guess it was a Senate hearing.
Yeah.
We actually were showing that on the screen and kind of just talking about it in the chat here while it went on.
I don't understand people, the same type of scenario happens over and over and over. And because everyone is so hyped up on thinking that everything's going to go to the moon, it's going to all be a moonshot, no matter what the news is, they take it as positive. And it's been extremely frustrating. And it's one of the reasons why I've gotten so excited about being in this market and producing the videos, to try to sort of inject some sanity into people.
But at the same time, with one of your strategies, if you're going to short these rallies, then continue the rumor buildup.
Right. So some people think that I'm a perma bear now too.
Yes.
Right?
Yeah. I get that a lot.
And so I can guarantee you that when price starts turning bullish, I'm going to be then considered a perma bull.
But yeah, well, I feel we're not there yet, and we're not headed that way yet. I still think we need to tighten up our range a little bit on where Bitcoin's headed, as well as towards the bottom side. I still feel like there's a little more work, a little more. A little healthier for the market, I feel, at least for it to happen.
Well, I look at it a little bit differently. I'm not looking at it technically at all. I'm looking at it, like I said, for me, the direction that the market is going is 80% fundamentals. That is primarily where it's going. And until there's some sort of fundamental shift in the narrative, as far as I'm concerned, it will keep on going down. and there's no limit to how low it can go if it stays bearish. I mean, it could go down below 1,000. You know, as a matter of fact, I have a big client that has, you know, millions of dollars in the market. And I said, well, you know, you have a lot of money. And so how are you going to play this? You should be expecting the market, you know, where's your ultimate bottom? They said, well, we think about 8,000. I said, really? I said, okay. So how are you going to, what if it goes down to 6,000 or 5,000 or 4,000? And you put in your bullish bet there. How are you going to justify that? And what are you going to do? You're going to just wait? Are you going to add to the position? Are you going to just like freeze? Are you going to get out of it and stop out of it and lose millions of dollars? So what you should be doing is like saying, pick a bottom that you think can't possibly happen, because that's probably where it's going to go. And then choose that as your ultimate bottom, and then devise a plan for buying into that weakness all the way down to that bottom with progressively increasing bets. You know, I mean, that's what a pro does when they're in accumulation mode.
Some people ask for the what's the nightmare scenario? What's our nightmare scenario bottom? I was like, well, I mean, if you want to see a scary level, you know, for you, your nightmare scenario, you're looking at like 3,000 where you're really spooked. But you know, in reality, I don't think it's a nightmare scenario per se.
Oh, it's a huge opportunity for the people who have money. You know, they're waiting for that. Now, I don't know if it's going to go down there, but you should be prepared to, you know, to partition and allocate your resources for that eventuality. Because if it does go down there and you invest too heavily ahead of time, you're going to be sitting there with, you know, sitting on your hands, not being able to do anything, or deciding whether or not it's gone down far enough that, hey, maybe I need to take a loss. And then right after you take that loss, I guarantee the price is going to shoot up. It happens every time.
Yeah. And yeah, a lot of people would love Bitcoin at that price.
Yeah,
of course.
So I'm a little talked out now.
Yeah, it's fine. Crypto Tech Junkies was saying $180 was his absolute bottom. Someone wants to install the ambulance at the bottom. A random one about shares and stocks. How much shares is recommended when buying stocks?
I literally agree with half of this stuff. Which half?
I said literally don't agree with half.
Yeah, I literally don't agree with half of this stuff. And yeah, still the same question. Which half?
Right. So obviously, you know, market cycles and everything, they definitely are a thing or are not a thing. That is completely your say. The problem I feel with people who get the markets are that they don't get the science behind it. And this is a mixture of science and markets. And that is something that hasn't happened before. I mean, what do you compare it to, you know? What are you basing this on?
What am I basing what on? The
whole argument that, you know, it could go down to here or nothing fundamental is happening.
Oh, I don't know. Well, from a fundamental point of view, all I have to do is just point out what's happened in the market. You know, okay, so we had consensus, crypto consensus 2018. It was supposed to inject new life into this market, expose new applications or technologies that's going to get more people excited and bring in more people into the market. Did it do that? No. It didn't do it at all.
Right? No, we did get amazing projects. We did get a lot of that stuff.
You know what?
Does that come into the market as a different thing altogether?
I think from your, I'm sorry for talking over you, but I just want to try to make my point. I think from your point of view, it sounded great, but look at what the objective real world event that happened. Were there more people that came into this market because of crypto 2018 or consensus 2018? Really?
Yes.
Really? Where is that volume? Show me.
Check the OTC volumes, over-the-counter volumes.
Okay.
This is again an argument, right? So I would want to learn more if I'm wrong. Don't you feel that these exchanges have like really, really low volume to actually tell you what the crypto market is like. I mean, compared to other asset classes, it is like really low volume, and I don't think it's a fair estimation of the price.
Why? The price, as far as what most people think, is the truth. Price is the truth. Price is a reflection of what the market has dictated, or the supply and demand has dictated. Price is the truth. It
But
may
isn't
be,
it easier to?
maybe slightly undervalued or overvalued compared to what your estimation is, but the market doesn't give a damn what you think.
Yeah, I know that, and that's why it's being manipulated to an extent. But to what extent do they manipulate it? How long do they keep doing that?
Well, it's been manipulated both up and down, right? I think mostly it's been manipulated up while it's been wanting to go down. It's going down because there are fewer people interested in it. If you just look at the overall interest in the market, some of the easiest ways to see that is, just do a simple Google search or Google Trends on Bitcoin. And those trends have correlated to the price of Bitcoin almost precisely, all the way up until this current leg up.
Do you remember the time when platinum was priced differently on like whatever the stock market or whatever the commodities market, and it was completely different in the physical form?
So,
like not too long ago.
All right, so that'll be a really great example because I happen to be a big trader of platinum.
Awesome.
I mean, a big trader of platinum. Like right now, I'm currently holding a position that's in the $20 million of notional value. So tell me what you know about platinum.
No. So that's what I'm saying. That the platinum price, like at least here in India, the price in dollars of platinum was nowhere even close to what it was in the physical market. The physical market was way more expensive.
Well, forget about where it was, but I mean, if you look at it in terms of gold, for instance, the spread has never been bigger than as of this moment right now in history. Well, actually, about a week ago. Why?
No, about platinum. How do we justify that then? Because price on
well, how do you justify
on a platform, right? So a platform which wasn't actually delivering platinum, wasn't settling in platinum, had a different price, and when you actually went and bought platinum, which is limited, obviously, it was a different game altogether. Right?
So is that your analysis of the fundamentals of platinum?
No, I'm saying that the same thing could happen with Bitcoin, right? Like physical delivery is a totally different game. For example, the price right now is 8,300, right? But okay, what if the price was 12K right now? From here, it went up to 12K. Would you be bullish or bearish?
So, first of all, what I was asking you was, what is your fundamental view of platinum, right? And why is the price where it is? Can you?
No, I have no idea about platinum. I don't want to just randomly say something. I have zero idea about platinum. I just gave that example because that is something I came across in my lifetime.
I get it. So then why would you make that as an example if you don't know? I'm not trying to be no,
don't worry, I'm not going to mind anything. It's all good. But
I'm just saying
in response to that, it's because the physical delivery, actually, if I wanted a piece of platinum, it was not the same as that on the exchanges, right?
Okay.
So now over here in Bitcoin,
do with the price.
Yeah. So if I want a physical Bitcoin, how long is the exchange price going to keep determining that?
So
right, it's already broken away in most parts of the world.
So let me clear up a myth right now. All right.
Yeah.
Physical delivery versus a cash delivery contract. In the Bitcoin world, the people who don't understand futures think that there is a fundamental difference between something that's physically delivered and this cash delivered. And I can guarantee you, out of not hundreds of years, but maybe 100 years of research, that in fact a cash delivered market actually can have more influence on the price, the spot price of a commodity, than the physical delivered contract. Right? It has, because the people that are in the cash market and the physical delivery market are competing for the same thing, for that price. So if someone's trying to manipulate the cash delivered market versus the physical delivered market, they both notice the same difference. So it doesn't matter whether something is cash delivered or physical delivered. Everyone thinks there's going to be a fundamental difference when futures all of a sudden.
But there's
and I can
nothing.
guarantee you there will be no difference. Because
I
there's never
agree,
been a
but there
difference
is-
in world history of any futures market where they've changed from cash delivered to commodity delivered market. It just hasn't. And that
No, it's completely the why I say that is not going to happen is because we know there are like 21 million of this, right? We know how many are mined, we know how many are left. How long do they, people don't realize that, oh, wait a second, this thing is getting over. We don't know when platinum is getting over, when gold is getting over, whatever, right? And secondly, it's the same way, like in India, for example, the price on our exchanges is about $1,000 higher or $500 higher. But actually, when we go out and buy and say, look, I want a Bitcoin here, put it in my wallet, it is even more inflated. It's the same in Canada. I know because my brother stays over there. There is a problem.
right.
As in, I'm comparing this to US rates, obviously, because I feel US is the most competitive market.
So there's an arbitrage opportunity there, right? But who's making that money on arbitrage?
Me?
Are you doing well on that?
Yeah, kind of.
Yeah, it's hard because the slippage is huge.
I mean, with $1,000, it's not huge, but that is what kind of made me realize that how long is, how long is this going to stay? Because, okay, the economics part of it, the cash market controls the physical market. I completely agree with that, right?
Mm-hmm.
My argument is for how long in this case, where technology is also going to be dependent on this, where we are going to have technology based on this eventually, for how long? Like,
Well,
don't you think that is, in this market, it would be different than what has happened in history? Or is it just going to repeat itself?
Well, I guess, from my point of view, it really depends on how the sentiment and the fundamentals of that market change. I mean, right now, in the market that we're at and the adoption of that market and the sentiment of the people that are involved in that market and the sentiment of the people that don't want to get involved in the market have given me a fundamental view of where I think price should be. And it's pretty much where it is now, and it's not getting better. So that's why it's not going up. If it goes lower, it's probably because there hasn't been any real upswing in terms of the
fundamentals,
fundamental value of Bitcoin. I mean, people only buy something or want to buy something if they think that it's going to be worth more tomorrow. Right now, there's most of the people that are getting involved in it don't believe that. So as that belief isn't fulfilled, then the price keeps on going down. When the belief shifts the other way, then the price will start going up. But what I wanted to point out was that if you go and look at trends and you type in Bitcoin, and you'll see an exact correlation to this market all the way up until April, or is it March? I'm sorry, April 14th, or whenever that day was when it went straight up. All right. Well, the Google trend.
Oh, somebody's Skype calling you.
What is? Sorry. Sorry about that.
That's okay. Take your call. I'll handle the chat.
No, I got rid of it. The Google trend has not changed from the trajectory that it had of almost straight down when we had this little leg up at all. And it's the only divergence that has occurred between price and then that Google trend. And so what that's telling me is that the broader market, the people that are actually searching out Bitcoin, are not showing any new interest. That they didn't recognize this little bump up that we've had here at all. So it wasn't new money coming in; it was old money manipulated. I don't know what other kind of conclusion you can come to.
Mm-hmm.
This isn't new money coming in. This is old rehashed money that's trying to manipulate the market. If it were new money, then it would have shown the trend. There would have been more interest. There would have been more people. And Coinbase would have been putting out statistics that hey, our sign up rate is rising again. Saying that, as a matter of fact, it from a interest point of view, it kept on going down while this last leg was going up.
Right. But do you believe, obviously the money is not coming in, that is but apparent. But do you believe that more influx of retail investors is a fundamentally good or bad thing? Or does it not matter? The whole sum of money matters. How many billions are going inside? That is all that matters?
No, I think that if you have more people involved with it, but that also implies that they're bringing their money with them and then speaking with their money. I mean, that's how they express their bullish or bearish attitude, how much commitment they're willing to put into the market, right?
Mm-hmm.
You can bring in more people, but if they're not bringing in any more money, then who cares? Are they just sort of like lining up, waiting for something to happen? How do you know?
But is that fundamental, like in our fundamentals column, is that a good thing, right? So fundamentals could be like that. So that's what I'm saying. Fundamentally, there are a lot of positive things happening, but yes, price-wise, I think we're just taking profit. That's what's happening with me, right?
But I'm trying to find out from you, what are those fundamentals? You're saying that there are a lot of new retail traders coming in, but they're not bringing in any money. So we can conclude from that they're just sort of biding their time, sitting on the sidelines, waiting for something to happen, perching, waiting like a cat, right? And then they're going to pounce when the time is right. That's kind of like the story.
No, what I meant to say was that, for example, now I actually have people who come and ask me, hey, can I buy like 0.01 Bitcoin? I want to start saving. There are more people asking me. Yes, there are lesser people who are coming up and saying, hey, I want 10 Bitcoins now, So this is my question. Like, is that a good thing that smaller investors coming in the market, as in the number of retail investors going up? Because obviously the whales are going to manipulate it. They have the tens of billions of dollars. Retail is going to take a lot of time to hit that, right?
So I'd like to see, I guess what I'm saying is I'd like to see the evidence of that, because I haven't seen that. And if they are out there, they haven't made any particularly significant impact on the market. And it may be possible that there are a lot more retail traders in there that are putting such a small amount that it's not perceptible. I don't know how to react to that. It's okay.
I get it. That's what even I have. That is a question, right? Because that's why I say that it's a new thing. And there's another thing I want to ask you, because I think you'd be the perfect person. So have you heard about the stuff like Mt. Gox is selling 16,000 Bitcoins? Oh, it's going to crash, blah, blah, blah.
Yeah. But
so
they're claiming that all they're really doing is moving it to another wallet. But every time we see it happen, everyone freaks out.
Yeah. So do you think, okay, let's just suppose that they were selling. What kind of a difference would it make to the market? Because the only way they actually are influencing the market is if they exit in cash, right?
Yeah. And every time they do it, it's like they're putting in maybe 2,000 Bitcoin here, 4,000 here, 5,000 there. And really, does that really make a difference? What's really making a difference is the fact that they're doing it and it freaks people out. And that's what's causing these sort of temporary bullish pushes, right? Or bearish pushes. Because of people's idea of what that might imply, right? But nothing actually happens. Then after the move, everything returns back to the mean. Until there's something that actually happens, everyone is just so on their toes about anything that happens that it influences the market, and then it regresses back to the mean.
Right.
Show me something real. What happens if Satoshi decides to bring in his million Bitcoin? That'll
the
crash
market
the market.
dies.
That's
That's the thing that'll kill Bitcoin, if anything can.
Right. But that'll probably get eaten up too, probably in a few months. And then everything will probably be back to normal.
Probably. But do you think that is possible? Like, for example, if there is, Avanize, no, we're not going to talk about BCH. Nobody wants to buy BCH with it. Go away. Sorry.
It's harassment.
It's harassment. Right. So, for example, on GDAX, there is like $2 billion of buys on GDAX, and I'm this Mt. Gox guy who says, okay, screw that, sell it all, get back to the dollar. How long would that actually affect the price of Bitcoin?
So the thing with Bcash is that there might be some awareness over in Asia, all right, But in the United States, if you ask somebody off the street what Bcash was, they'd have no idea. So it's there is some, some.
Yeah, nobody knows it over here either, dude. Just
All right.
don't
So
get them started
the
on
branding
this.
of Bcash is piss poor, and that pisses off Roger Ver. And it has nothing to do with whether or not Bcash is better than Bitcoin or not. I mean, I happen to think that it's probably a slightly better Bitcoin, but it's not because it doesn't have the network and it doesn't have the branding. And that seems to make way more difference right now, at least, than any other factor. Would you agree with that? I mean, it just doesn't seem,
I tend to ignore anything about Bitcoin Cash and Ripple. I just don't.
And you're involved in the market. I'm saying people that are outside the market that aren't as involved have no idea. They don't even.
Yeah.
What is Bcash? They have no idea what that is.
Exactly. Right. So that's what I wanted to know, because we had a big discussion over here, and I continuously just kept saying that, even if they do sell it, it's not going to be like all the exchanges crashing at the same time. It'll probably be one exchange that goes down, and then the money flows over there, and people will just buy it up.
Yeah.
Right. So you're saying until the big boys don't decide to put in the billions of dollars, most of the other stuff does not matter, price-wise.
Yeah, I mean, and even when they start getting involved, they've got to do. There still has to be general awareness of what's happening out there. I mean, the big boys aren't going to get involved unless they think that there's going to be a network that they can take advantage of, right? They're not going to pump billions of dollars in and then think that they're going to be taking advantage of a bunch of millennials that are basically holding down the fort. They're not going to put billions of dollars unless they think that they can get another 10 or 15 or 20% of the general public involved in this market. Because they're not going to make money off of the small sliver of demographics that makes up the people that are actually involved in this market. There's nothing in it for them.
So it's going to be big only if whales are competing against whales, basically, when they have those billions of dollars to snatch away.
Well, they're going to get involved. The big guys in the big markets are going to get involved when there's wider adoption. And it's not going to happen overnight. It's going to happen, gradually, or if there's some kind of killer application that everyone has to have. Or
okay. And another question. Sorry, you were saying something.
Yeah, or there's some, something has to change. There has to be some new public ledger plumbing that gets out there that's irresistible to enterprises, so that they can gain a competitive advantage and then start building dApps on top of that.
I actually wrote that down when you said that yesterday.
Yeah.
And I wanted to just kind of put that in my ideas pad and expand on that. Like how, what would lure that type of market? Would it be communications, or would it be economy related, travel, finance? I was trying to put things together and ideas together for.
Well, there are some use cases that seem to be more natural fits than others. Supply chain seems to be one of those, but that's what it's going to come down to. What business, the business that is able to implement something to show a real competitive advantage and blow away their competitors. And that's when other people are going to get interested and they say, oh, wow, someone did it. And they're actually making hay with this stuff.
Do you think projects like ONT have a big role to play in this, because they, say they're on the the Neo platform, and they're helping businesses, integrate their current existing systems and integrate it with blockchain technology to solve, some of the problems that we see some of these other projects using, like VeChain. Yeah.
Show me the money.
Yeah.
Show me the money. I don't give a damn what they say. They can have all the partnerships that they want until they actually create something that will spur, true mobility of money, get interested in it and start buying, and their business starts taking off. They can I mean, they can talk about this till the cow comes home. It doesn't make any difference. I mean, it's really cool, all the technology. See, that's the thing. Some people think that I just don't believe that I don't understand the technology. You don't see the vision. I see all the vision. Trust me. I've been there. I don't know what everybody knows of my background, but, I was a chief architect of a Fortune 50 company. You think I don't see the vision? I understand it exactly. But I also understand that ain't nothing happening until somebody puts some skin in the game.
I actually have an idea for that. So that guy who has $20 million, you secretly get into his account. There's this thing called 100x, and there's this button called a buy button. That's what you need to do.
Well, you're saying that we need futures and leverage or margin.
No, I just mean that you need to put that money in a buy and just put the price up.
Oh.
Because I need to buy a car. No,
yeah, but markets are, are a reflection of the people that are involved in the market, and stuff like that is temporary. It will cause temporary glitches, and then it will, if the market is big enough and robust enough, it'll just revert back to the mean very quickly.
Do you think physical delivery of Bitcoin, because I know some exchanges are planning it, will have a positive or a negative effect on the price?
Neither. It'll just be another derivative that people, if it attracts more people, if that makes them feel better, like they can have better control over the accumulation of Bitcoin, if that's their goal, it may bring more people into the market, because it's another tool that maybe is more attractive to the professional investor, maybe. But, we've had CWE and CBOE futures out there. And, everybody thought that once that they came online, that it would attract all of Wall Street. It hasn't done so much that. I mean, the volume has increased dramatically since it has, those have been introduced. As a matter of fact, if you look at the volume of the rate of increase of volume of futures products, it's almost an inverse to the actual cash volume of Bitcoin. So while if you look at volume right now of Bitcoin, you'll see that it is slowly degrading. As a matter of fact, every day seems to be a little lower than the next. In futures, it's a little bit bigger than every day. So there is more volume coming into futures, and there are more people using it. But is that Wall Street? I don't think so. I think that is more people that are getting involved here in the retail market, and also miners are using it to hedge their business, because they're starting to understand that they need futures in order to give them some stability in their business, especially when price comes down like this.
That's another question, right? So since obviously now these miners are way up there in the billions, right? They've made their billions, or at least $100 million. Do you think that they kind of are going to like put a bottom into the price and say that, look, we don't let it go below this because it's not profitable to us then?
I don't know how they'll have control of that. I mean, unless they're all colluding with one another.
Yeah, of course. That's what I mean. And even the big ones, like, for example, Bitmain, right?
Mm-hmm.
The product is basically selling miners. So if they want to sell their product, that thing it has to be profitable. So, if they've made $5 billion in profits or whatever, do you think that has an effect?
I don't know that price fixing or trying to hold a bottom or to them, because any kind of price fixing has never proven to work. And whether or not, if they do, it will frustrate other people, and they may choose not to participate. So I don't see how that strategy is a good strategy.
So, but then that means that they're not going to crash it like the way we say, because that would frustrate another group of people. So it's going to be a balanced thing all through, right?
Yeah.
Uh-huh.
They can crash it if they want. Maybe they want to take the ball and go home. Can't play with my ball anymore.
Right.
That would have to be, like a mass exodus of the miners. They all collude, although I think that they're colluding to some extent already.
Yeah, but it's a positive collusion as of now, don't you think?
Yeah, so far. They're trying to keep the market going. They're trying to make it somewhat attractive. You know, for a while there, they were charging outrageous fees, and that was kind of killing them. They started to see the possibility of a death spiral. They backed off that.
Right. So holding the bottom is it possible? I mean, it's not profitable, but is it possible?
I don't know. I don't know. It's a pretty big network. So that's the other thing that we're learning is that Bitcoin is the biggest decentralized network in human history.
Yeah.
You know, and we're still learning its behavior. Matter of fact, I remember, man, I got to get my YouTube channel back. I did a video on, you know, I think I entitled it, is the Bitcoin network alive? You know, does it have consciousness? I think to some extent it has this sort of shared consciousness of all the people that are in it and in their actions. When you have, you know, tens of millions of people that are all acting on their own self-interest, but they tend to kind of coalesce and sway and ebb and flow across the network, and they're kind of sort of imposing their will on the network at different points. You know, you start wondering whether or not the network itself has some kind of sort of shared or mass consciousness.
That is an interesting point, though. It does kind of act like a different being, the network.
Yeah, and
I
it
like
may
that
have,
one.
and you know, one of the things that's inherent in any kind of life form is this this need to survive, and so maybe that mass consciousness will exhibit that kind of behavior, the sort of survival instinct.
So, Godel Gang, whatever that means, has a question, actually has a statement that decentralized, most of the money belongs to the miners in China, plus 80% has been mined so far. Do you think the day Bitcoin is like completely mined, as in the number of Bitcoins are already out in the system, will that have a positive or a negative effect?
Negative, I think.
Like,
You know, it's hard to tell because we're assuming that Bitcoin's not going to change at all, that there's not going to be any new rules or other strategies that are going to be applied to it. How is that ecosystem going to evolve? I mean, there's a lot of things that could change in that time frame, so it's hard to tell. But you know, once there are no more coins to be had, what's the point? And that's a long time into the future too, you know.
oh yeah,
But
of course.
and you know, assuming that the whole network grows to kind of support the fewer coins that are being mined, maybe there's very little effect. But it would have to grow pretty big.
Do you think the fact that it's the most decentralized, the biggest decentralized network, and for the near future, I think it is going to continue to be. Is that why Bitcoin has like the least chance of failing than these other altcoins, which are actually technologically better than it?
I think that has more to do with branding. If you brought in something else that was just way better, and then people were convinced that it was better, and then that's what they should use, then that's what they would use. And I think Bitcoin can go.
Whether it be decentralized or not.
Well, I mean, maybe it is decentralized enough.
Right, right. Obviously, decentralized enough, right? Okay.
Yeah, you know, if you could get into Bitcoin and it was or another type of coin and it acted way better, it was just easier to use, and people started adopting it, people would drop Bitcoin in a heartbeat. You know, it may become kind of like this sort of collector's item. But I'm assuming a lot of things that I have no idea how it will actually transpire and how it will behave. I really don't know. I don't think anybody knows.
Yeah, I actually think that, like, obviously, again, assumptions and my personal thoughts are that if the amount of technology they say that they can execute with Bitcoin, once it gets into smart contracts and blah blah blah, everything else, the more technology on it is just gonna, and plus the fact that it is the most decentralized thing, might just be enough to convince people that this is better than a faster technology. Like, for example, the internet, right? We're still on that HTTP thing. HTTP is slow as,
Mm-hmm.
but we all use it because it's just there.
Yeah,
So that
we're all living in this this bubble, and we all believe, have our beliefs based on the limited space that we live in. Once this bubble gets way bigger, and all the rules change, and none of us can anticipate what those changes will be like. There could be things that come out that are just as good or better than Bitcoin, that have better branding, and people gravitate towards that, and then everyone in 10 years will wondering what was Bitcoin. Why not? I mean, why couldn't something get just as big or bigger? Unless there's some kind of mathematical proof that would show definitively why it couldn't, as far as I'm concerned, anything can happen.
Do you think Bitcoin will coexist with the rest of the currencies in the world?
I don't know. It's so small.
Or the US dollar? The US dollar. Will it coexist with the US dollar? Because I think that's just the most widely accepted one.
Yeah. Right now, the form of Bitcoin is unacceptable as a currency. I can't see it competing with any currency right now. It's just way too volatile, for one. You can't have a currency that can go up and down, 4, 5, 10, 15% in a day. It shouldn't be going up and down more than, say, 0.1% or 0.5% at most in a day.
But that is what attracts all of us, right?
Well, it's attracting speculators. It's not attracting business people. You can't run a business on something that has that kind of variation.
Do you think it's cryptocurrencies have brought in a culture of saving in the American economy?
Well, there's been this hodl.
Exactly.
But that was all a joke to begin with. And then it turned into a strategy, because that was the only way people thought they could make money. That's an idiom that is specific to a particular era in time in the life of Bitcoin, as far as I'm concerned. Right now, it depends on where you are too, in what culture you're in. I mean, there are other cultures, like in China, saving is highly regarded. In the United States, it's not regarded at all. So why would that change just because it's another currency?
But it has, right? I mean, I know a lot of people who are actually spending way more responsibly because they don't want to exhaust their Bitcoin, or they don't want to have to sell their Bitcoin.
Right.
Long term.
Yeah. So it's still a microcosm of the total. Small percentage of people.
Oh yeah, but I'm asking, do you think it is a good thing that this thing is being put in, or is it not actually happening? It's too small to say that it's actually happening right now.
Yeah,
Ernie and Sasha, I've got to step into a call. Sorry to interrupt, but Ernie, it was a pleasure. Maybe you're back on, or you're still on when I get back, but I appreciate the time.
Oh yeah, thanks. Yeah, I just don't know. I think it's just too small, and there's not enough evidence yet, to say that that's going to be the new culture. Culture is very difficult to change. Now, we've developed there's been a culture that has developed inside the bubble of Bitcoin, right? But that's totally unique to Bitcoin. It's not something that I don't know. These same people that are being much more frugal with their Bitcoin, are they that way with their fiat dollars?
Nope.
Have they taken that same behavior and then transferred it to their fiat dollar behavior?
Not really.
Yeah, so I don't know.
Right, and that's what I'm saying. So all these things that you are doubtful about. So you are what basically is, let's say, the smarter people, the smarter level of investors. They are confused about it in different ways. Whether they can manipulate it or not is a different thing, but it's just the amount of confusion and the fact that it's just proving itself in all those circumstances that I think that this market, like Bitcoin, is going to play out completely differently than any other market.
Mm-hmm. Well, yeah. Well, I can tell you that there's very little correlation between Bitcoin and any other market. I've compared it from a statistical point of view to just every other market out there, and there is no correlation as far as I can tell. I hear a lot of people talking about correlation to the S&P and other equity markets, but they look at correlation as, oh, look, it's going in the same direction for a couple of days, and then all of a sudden they say it's correlated. But from a statistical point of view, there's very little correlation in Bitcoin compared to any other market.
Right. What do you think Bitcoin is correlated? Or what are the top 3 things that Bitcoin is correlated to in your research? Whatever it may be, like people come up with stuff like misery index or Google searches or whatever. If you had to pick 3 things that indicate the price of Bitcoin, what would they be?
I don't know, because I've had a limited set of things that I've looked at. All I've looked at are all the different futures and commodity market, trying to see what's the difference between Bitcoin and index or metals or interest rates or agriculture, softs. I've looked at all of those different things, and I haven't seen anything that's even close to a correlation. All of them hover around a zero correlation. But I haven't gone any further than that, so it's it's a limited set.
That would be interesting, though, right?
Yeah, I think so. Maybe there's a correlation out there, and then again, that correlation could be just a coincidence.
Do you think it is in the interest of the American government to take out a homebred crypto, which is on the blockchain and has a certain X number of coins that won't change? Or do you think they can't afford that?
Is it in their interest?
Mm-hmm. Like basically right now, they're kind of free to just print dollars, right? Is it in their interest to actually stop that and make something, that's where they could use this cryptocurrency thing as a crypto dollar? Or will they never do that?
They may come up with a type of crypto dollar. I don't think it's going to be anything like Bitcoin, quite frankly, because they want to have some kind of control over the elasticity of that money supply. They're going to feel that that's going to be an essential component, and that's kind of antithetical to what Bitcoin's about. Yeah, I feel like they're going to they probably will not be able to envision a coin that does not preclude control, at least some kind of control. At a minimum, having a slightly elastic money supply. Doesn't have to be fully elastic like what we have now, but I'm just saying slightly. So a fixed money supply I don't think would work. It would be too volatile.
Right. That's why the rebellious nature of our generation draws us towards Bitcoin, right?
Well, they think that anarchy is possible, or anarchy is our future.
Well, anarchy always happens, though, eventually. That's
Yep.
a cycle again.
Yeah, that's great. It's just not going to happen anytime soon. And
Yeah, I mean, not that I want it to happen, but it does happen, right? You have to restart everything eventually.
eventually, but the restart only comes after some sort of black swan event.
What if we are in a big black swan event? And I mean completely just economy-wise. I don't want to get into the whole wars and everything and the conspiracy theories, blah blah blah. What if just economy, the way it is unstable? Is that possible?
Oh, of course, but we're not going to know until after it happens because that's the sort of the definition of a black swan, right? It's unknowable. I mean, I look at the powers that be who hold all the power in the world.
Oh, that's a cycle in itself, right?
The banks.
Oh yeah, the banks.
The banks hold all the power. Period. End of story. It's hard for me to believe that they would relinquish that power easily.
Yeah, but I mean, Bitcoin really isn't going to take away power from the banks. That's just a stupid analogy that people have come through with, right?
Well, that's what these Bitcoin faithful are talking about. That to basically sidestep or completely eliminate the need for banks. That's their vision.
Like you don't need banks anymore, type thing.
Yeah. That's the
Well,
vision.
that's I don't know. I don't know if the barter system, that's what Bitcoin's model is kind of based on. I don't know if that's
So you think that it can live and coexist with the banks?
Yeah, I think the banks, like with anything else in the world, are gonna they can easily get this thing in their grasp. I actually think they already have it in their control. Sheer volume wise, what is it to them? Spend a couple of $1 billion and just gain stake in this, or
that may be, but a lot of the banks, even in the older money, they still don't understand Bitcoin at all. You look at some of the richest people in the world; they really have no clue.
Right. And at what point do you think that they actually understand it and say that, okay, this is worth my dollar?
I think
when does that happen?
They're going to ignore it until they can't ignore it anymore, until it starts hurting them.
Are we there yet?
No, I don't think so. Because if we were, they would be actively trying to squash the darn thing.
What is the market cap of Bitcoin according to you? We're actually not the Rothschilds and not the Bill Gates of the world, but the lower downs, like the rich people, but the smaller rich people actually stand up and say, wait a second, how many $1 trillion do we need in Bitcoin to finally make that happen?
Probably something bigger than what the dot-com bubble burst at, which was at about 7 trillion. So I would say probably something north of that.
Right. Why do we always compare this to the dot-com bubble, though?
Well, it's not. I'm not trying to compare it to the dot-com bubble. I'm just trying to compare in terms of relative size and impact on an economy.
Oh, okay.
When I first encountered Bitcoin, my view was this had the potential to be orders of magnitude bigger than the dot-com or the internet economy. But that was my kind of wide-eyed view.
But that is what it is now. You were right, so.
Mm-hmm.
Yeah, I'm saying that is what it is, and you were right, and that's what it is now. So why do you think it's still being ignored?
Because people don't understand the use cases or how it's going to actually give them a return, and they don't understand the cultural shift and the actual physical shift of the nature of which they conduct business under a decentralized economy. They simply don't understand it because it's never existed before.
Right.
And so until that happens and they figure out how to gain some control or realize that they can't gain controls, they have to figure out what new kind of service that they have to offer in order to still survive in this economy. You know, I mean, if you introduce something like Open Bazaar, are you familiar with that app? It's a kind of like a peer-to-peer.
Yeah, I've done that. Yeah.
You know, if that took the place of most things that right now we use Amazon for, and that no longer existed, you know, people that are in that business are going to be figuring out, you know, trying to figure out, how do I exist in that kind of environment? How do I make money off of it? What's the new type of business, the new type of service that would have to integrate with that in order to maybe, say, deliver the product for people, or provide services around, you know, enhancing, or I don't know. I can't even envision what it would. But, you know, all those big companies, they're not going to find a place there, and they're going to want to compete. So they're going to probably try to create something that competes and convince people to use that instead of Open Bazaar, as an example. And then who's going to win? I mean, it's whoever's going to be most attractive to the consumer. That's going to be a big fight.
Oh yeah, for sure.
And, you know, you can extend that from Amazon and to the banks. I mean, the banks, like I said, are not going to give up easily. And in my view, it's not going to be just a matter of, you know, how they're going to provide better services. They're not going to give up physically. They're going to keep people in servitude if they have to, and force them to use their fiat dollars.
I think the only way this can work is if it is actually equated to something as widely accepted as the US dollar. I don't think it really has any value if it's just, you know, the day it's not equated to a US dollar is the day that Bitcoin fails, basically, or whatever currency, you know, is dominant. We're getting a few questions in chat. Somebody says that, do you think we should differentiate between cryptocurrencies and blockchain?
Well, they're orthogonal to each other. You know, I mean, cryptocurrencies is an application that uses distributed ledger technology, right?
Mm-hmm.
They're not the blockchain is just one of the is the distributed ledger, you know, that is built into, and it is one type of distributed ledger technology. You know, so they're fundamentally different. You know, one is part of the other.
Right. So the point where all these companies have different currencies for different blockchains, do you think that makes sense? Or is this that a way to, you know, raise capital?
Yeah, that's all it is. They're just different, you know, solutions looking for problems. You know, I don't see in my view, there's probably going to end up with a handful of currencies and a handful of public ledgers, and then a whole bunch of smaller private ledgers. But right now we've got 1,500, 2,000, 4,000 coins out there. That's probably going to get whittled down to, you know, under 100, maybe less than 50.
Which actually makes sense, right? Because the rest of it is just basically doing what the other one is doing. So it's just a evolutionary thing that survival of the fittest is going to eventually just happen over here also.
Yeah, then it's going to be developing APIs, you know, interfaces, and applications on top of it, and services, and other things that kind of coexist with it, that allow it to interoperate with society. You know, it's hard to imagine right now, because it's unknowable where it's going to go. But I can't see having more than just a few primary competitors out there. And that's the other interesting thing. Is it going to be something that's sort of centrally controlled by some kind of organization or consortium of organizations? Or is it going to be completely outside of that and be not owned by anybody? The public blockchain, the thing that's used to, as the transport layer. Or, will it become like the internet?
I feel that the next 3 years, up until about 2021, 22, most of these things are going to be so clear that it's like going to be the same thing as us, like taking internet for granted. And if you ask your grandparents about internet, they're just getting the hang of it on their cell phones.
Mm-hmm.
I think it's going to be that clear. And technology, actually, historically, if you see, technology now catches up faster than what it used to. Like the acceptability of like telephones or cell phones or whatever. The acceptability of the telephone took ages, and the cell phone just went, snap.
Right.
Everybody had a cell phone eventually. And like, when's the last time you traveled on a train? I don't remember when I did a long distance travel in a train or a ship. We just take air travel for granted now. So crypto
we don't travel at all. We don't have to travel.
Yeah, or we just sit down in front of our PCs and try and give away our money.
Yeah.
Yeah, that's another way of looking at it.
Well, look, I had a really great time here talking with you. I really appreciate your time, and I'm getting tired though.
Yeah, I have that effect on people. It's okay.
No, it's not you.
No, but it's really good. These are the fundamental questions I think that everybody has in their mind and everybody has opinions of. So it was good talking to somebody who is, I feel, a bit more clearer than me, at least in his mind. So it's always good to get a new perspective from people who actually know what they're talking about. And the best thing I liked is that you're not afraid to say, I don't know, because that is something that is missing in this market. People just want to come up with an answer, even if they know it or not. And the fact that you said that, look, this can happen or that can happen, I don't know, is that speaks volumes that we actually don't know where this thing is going.
Right.
We are positive about it, but the future is still unclear.
Yeah, that's absolutely true. A lot of people thought that this year was going to be the year of ICOs too.
I actually think this is going to be the death of ICOs.
Well, that's what I said. I said no. And when my YouTube channel comes back, you'll see I have one YouTube video that I called "This is the Year of Remittance." What I meant by that was that I felt that at some point, and actually it's already started, there was already been sort of a sweep by the SEC and other security agencies of other countries just happening the past few days that are going to start cracking down on a lot of these ICOs and force them to give the money back.
That should have a bad effect on the market.
It's already started.
Has it?
Yeah, there's some good articles recently, today and yesterday.
I am a big fan of the way the CFTC and the SEC are dealing with this, though. I think it's amazing.
Yeah, it's a nice dog and pony show.
Is it? Is that what you think it is?
Yeah. Look, they have, and the SEC has made this very. The positions are very. The SEC has two primary mandates, and that's to create stable markets and protect the consumer. Period. They're not out there to try to make the world a better place. They're out there to do the job. The CFTC is out there to serve all the futures traders out there and make sure that their experience in trading futures is cool and bring them a bunch of new cool products that they can use. They're more on the innovative side, but they're still also an enforcement arm to make sure that people are doing things by the rules. Ultimately.
Right.
for them to come out and think the people, that they're out there to, promote blockchain, that's not what they're there for. They're there for a very, very specific purpose. And because you had the CFTC guy come out and wax philosophic about his kids and how they're all, into monetary stuff and he could never get them involved in that. And people were so, enamored with that and thought that was real positive, that he had a more visionary look at it. That's fine. He can have that, but that doesn't mean that all of a sudden he's going to pass regulation. First of all, they can't just pass new regulation. The new regulation has to come from Congress. All they can do is take the existing regulation and then pass policy that would enact it.
Exactly. It doesn't matter if he's pro or not. He has a job to do, and he's going to do it this way or the other.
Yeah. Yep.
Nice. So feel free whenever. I mean, I know you're getting tired and all, so
yeah, I am.
I'm just gonna hang around over here, talk to chat.
Okay. Hey, it was a real pleasure. Safraz. Safraz. Okay. It's nice talking to you.
Same here, brother. Same here.
Hope
to see you here. Oh, Ernie. Yeah, I was just trying to figure that out. So, Ernie, I hope you're here more often and we have more of these chats. It was really nice talking to you.
Oh yeah, definitely, absolutely. I enjoyed myself a great deal. And maybe I'll have something that's a little bit more pointed and more technical, and people will get into that. I know everyone's looking to see, other people's ideas, and then they want to try them out for themselves. Unfortunately, they're probably not going to get a lot of that from me.
Well, whatever you have, we'd like to bring it on the table because I think you know your stuff.
Yeah, sometimes.
we just pretend. When we don't know, we just pretend.
That's right. We're the great pretenders.
All right, take care, brother.
Yeah, have a good night.
Good night.